Are you looking for more out of your life? Do you need ideas on how to start new businesses and how to move forward in your own personal life? Well, guess what? You have come to the right radio show. At You Can Overcome Anything podcast show, you will learn and hear from many people from all walks of life who are sharing their challenges, their stories, the habits, and the mind shifts they had to overcome to become who they are today. On top, you will get a chance to connect and see how you can overcome anything by networking and learning about your next move through this radio show. I present to you our great speakers at You Can Overcome Anything podcast show with your host, Cesar Espino. Hello there, and welcome back to another episode of You Can Overcome Anything podcast show. It is their host, Cesar Espino, and today I have a special guest. His name is Lane Kawaoka. He's a seasonal real estate investor with over a decade of experience, having acquired more than 10,000 units valued at 2.1 billion. As a founder of the Wealth Elevator, he helps professionals build passive income through syndications and private placements. A former engineer, Lane now educates investors via his top 50 podcasts, sharing practical strategies for financial freedom and generational wealth. Hey, Lane, how are you, man?
Hey, thanks for having me, Cesar. Aloha, everybody.
Yeah, hey. So tell me a bit about, and before we dive into what you're doing right now, tell me a bit about your upbringing and where you originally from.
Grew up in Honolulu, Hawaii. My parents, they had pretty good jobs. We were kind of taught to go to school, study hard,
Mm,
and then obviously buy a house to live in, do the old 401k. So I call it the linear path. I was just kind of, an average middle class kid
mm-hmm,
and got my engineering degree, started to work for the man, and good saver, right? I think that was maybe the maybe unusual thing. I had a decent paying job, almost six figures back then,
mm-hmm.
and was able to save, I think, 20 or $40,000 per year. So I saved up 80 grand pretty quickly to buy a house in Seattle, and that was kind of my first foray into real estate in 2009. Yeah.
Okay. Yeah, you mentioned something that I think is important, and I do agree with you on that. So much now, right? There's the idea of get a good education, get a good job, graduate, and kind of wait for that shiny object to retire and live happily ever after. And I personally believe that that is not the case. I mean, maybe we have a very top type of position, maybe that can happen, but really that's not the reality. So you kind of went through that, as you mentioned. You saved up, you have an engineer background. At which point did you kind of realize that maybe there was a different way for you to do something different than the linear path?
Yeah, I mean, a couple of, the writing on the wall was I was not very good engineer in college.
Okay.
I think my GPA was like 3.01. And there's a bit of a saying out there saying like, if you're an A student, you work for C students, and then B students works for the government. So I was kind of like a smarter C student, but
Yeah.
I knew like, just trudging away at a job wasn't going to be my thing. I went to work pretty quickly for a I'll say they're a Fortune 50 company as a management trainee. So I
Mm,
got kind of put in that track, but I kind of knew very early on that I was not the one red circled to, be moved up a position every couple years and, you know, do that type of path. And that was kind of where things started out. My first like job or role with the company was kind of a construction supervisor. So I, get a lot of experience working with, guys way older than me and given a lot of responsibilities out in the field. But the other part was I was never home. So I had this
mm,
big house to myself, and I just kind of on the whim decided to call an old property manager up I had in college and hey, can you rent this out for me? And that was kind of my first foray into like, whoa, this is cool. I'm getting this $2,200 a month, and my mortgage and PITI was 1,600. So for a young 20 something year old kid, that was a lot of beer money starting out.
mm-hmm.
And then a few months went by. I was like, wait a minute. If I just kept doing this a few more times, rinse, wash, repeating, I'll be able to escape the rat race and, quit this crummy job I don't like.
Yeah. There's something to be said about that too, right? I mean, again, you said back then you were probably close to making six figures or maybe above six figures, right? That is one of the biggest challenges that people have right now. Is when they're stuck in this job, really, and they feel like it's secure, but in reality, it's never secure, right? And so having the idea of, can I actually leave this secure job that I'm getting this paycheck, every week or every 2 weeks, benefits, vacation, all this stuff that they kind of give you to stay there, right? How do you walk away from something like that? How do you walk away from, what everybody more or less is chasing and needs, especially if it's, again, quote unquote, secure job? How do you actually walk away from that, knowing that you're taking this leap in, perhaps, may not have something to get in the next couple of months if you're not making any transactions?
Yeah, they call it the golden handcuffs, right? We're paid just enough money to be appeased. There's a saying out there, the enemy of good is great, and or enemy of great is good.
Hmm.
And that was exactly me, right? Like I had a good paying job, very somewhat secure, but obviously, like to keep working at that, you got to do a lot of office politics, a lot of that BS. And it just started to realize that, hey, this is going to be somewhat of a drag on me. So I needed to kind of find some other opportunity to make something money on the side. And that's what I did. I started buying rental property after rental property. 2009, bought that first one. And then 2012, I bought a duplex in Seattle too. And then by 2015, I had 11 rental properties and I was kind of off and rolling at that point, but still working the engineering job on the side. It wasn't until 2018 that I was finally able to quit my engineering job and turn this into a full-time business for myself. But I think, we try to help a lot of people out these days. Like nothing's wrong with just buying a handful of rental properties to get started and doing this on the side of your real day job, where really your higher hourly rate is at your day job more than likely.
Right. One of the biggest things I think is, I like how you said you're kind of doing things on the side, building until you felt comfortable. How do you go from, did you leverage your credit? Did you leverage, other assets? I know you had saved some money to buy the first house, but how do you go from going from one to two to five to 11? Like, because I think one of the challenges that I can see people asking is like, well, I don't have a good credit, or I don't have the means, I don't have the money. How do you go about getting into at least the first, rental?
Yeah, I mean, no BS here. I mean, I had a good paying job and I had capital. Real estate is a
Hmm.
capital intensive business. There are a lot of people that teach people these no money down strategies, these house flipping strategies, wholesaling strategies. I never did any of that, so I don't know. Um,
Hmm.
I'm mainly like, if you have good money coming in and you're able to save it, standard 20% down payment, rinse, wash, repeat that way. To me, all that other stuff is more active real estate businesses, very risky too, where I think that what people want is something that's more passive, right? Something that is the secondary thing that they're doing.
Got it. Got it. Okay. Got you. And so you said so you've been in this journey for about 10 years, right? More or less.
2000 and yeah, about 16 years, I would say about now, yeah.
Okay, got you. What has been the biggest lesson that you've learned through this process?
Yeah, so 2015 I had 11 rental properties and then that's when I started to buy apartments. And by 2020 I think we went over $1 billion of acquisitions. Now well over 2 billion. I mean almost like maybe like 10,000 units. So
Hmm.
it's you're buying them in bigger chunks basically. So I mean it definitely has grown like a hockey stick. But I rode a good wave, right? 2010 to 2022 was a
Right.
great bull market. In 2022, interest rates skyrocketed 40-year high, quickest increase in history, and commercial real estate hit the skids, apartments. Now, it's
Hmm.
very different than residential real estate. In residential real estate, you buy properties off a 30-year mortgage cycle. So it's
Right.
a little bit more resilient to these shock corrections. But in commercial real estate, a lot of people buy them in, 3-year or under debt cycles. So if you have a flash correction, people are forced to sell their properties or refinance and throw in a huge amount of money, which they typically cannot do. So they have to give up the asset, which creates this correction. Which, by the way, if you haven't done this yet, it's an awesome time to get involved now, buying things 30% off the peak of a few years ago. But I had like maybe 90% plus of my net worth into commercial real estate,
Yeah.
and I got hammered. Now, again, nothing I say is, financial investment advice.
Right.
Those are for like the certified financial planners that sell you marketable securities, of course, right? But um, I on the flip side of that is like, well, I wouldn't have grown so much from a knowledge standpoint, most importantly, network standpoint, and then of course net worth standpoint, if I wouldn't have concentrated.
Mm-hmm.
So, in my opinion, again, not financial advice, you gotta when your net worth is lower, under $1 million or $2 million, and you're getting started, and you're still in growth years, you gotta concentrate. You gotta make some more concentrated bets at the end of the day. Of course, you try and diversify, right?
Mm-hmm.
But you have to kind of pick your racehorse or your vehicle here. And mine was commercial real estate. Then it moved into apartment buildings, workforce housing, because the rich are getting richer and the poor are getting poorer, and this middle class is going to need to live in apartments more and more in the future. And I believe that, you know, at some point, yeah, I should have diversified more, but you know, you learn things when you get beat up, right? When there's
Right.
blood in there.
Yeah. Yeah. One of the things that I have here too, and I think that's part of your success, or perhaps an element that people need to look into. And you talk about, you don't have to go through the traditional path to build wealth, having the right connections, the right people, or knowing the right people. So that's saying, your net worth is your network, right? And so understanding that, tell me a little bit about that. Like, how important is it to be in the right room with the right people, or listening to the right people, right? Because a lot of times we take advice from our family members or people that are so close to us, but they haven't been there yet. And we tend to walk away from somebody that maybe is doing it like yourself, somebody that, that is doing the business, but yet we don't believe them.
Yeah. I mean, I did not have any accredited investor family. My parents never owned rental properties. I didn't have a rich uncle. So I didn't know anybody who had, massive amount of money or into these more country club type of deals out there. And what I've realized, and part of this is luck, as I had 11 rental properties in 2015, I started to get into circles with other higher net worth accredited investors. Some of these I paid to get into these rooms. Of course, at some point you have to pay to play. And what I realized from these people is they all had owned rental properties in their past, and they were all trading them in, just like a monopoly. You trade in the
Hmm.
little houses for the bigger buildings.
Right.
And these people were, also doing it because they had a higher net worth, bigger propensity to getting sued because now they actually had something to lose there before, as opposed to their earlier days. And they're going into these syndications and private placements as a passive investor. And this is where what I realized is, hey, these guys somewhat um, like they kind of verified what I was thinking in my head, where the trifecta is investing in alternative investments where you get direct access to the deal, cutting out all the middlemen. You By investing in a lot of real estate, you get a lot of tax benefits, and you can do these different strategies on your taxes that go well beyond your Roth IRA or Mega Roth or IRA or
Hmm.
solo for or 401k. And then, running it through an infinite banking system, right? This trifecta is very, very powerful, but it's very counterintuitive than what we've all taught. And when I got into this echo chamber and learned by osmosis from these accredited investors, I started to realize these best practices, and I put this into my book, The Wealth Elevator. And I was frustrated because this is stuff that the average Joe could implement, but it's the complete opposite than what our all parents taught us.
Yeah, for sure. Tell me a little bit about what, for those that don't know, what is a syndication? How do people get involved with something like that?
Yeah, so I guess yeah, so what a lot of people don't realize is if you look out there, there's a lot of residential property, single family homes, a lot of landlords will buy those things, obviously.
Hmm.
But you look at the commercial properties, right? I'm sure people see these things pop up along the freeways all the time there. And the question is like, well, who owns those things? Well,
Right.
in most cases, big institutions will purchase those properties as more institutional commercial assets. But what you don't realize, sometimes it's owned by a smaller investment group, more sophisticated mom and pop investors that will go and take ownership of it and bring in passive investors along with them, maybe 50 or a couple hundred people. So the analogy I like to use for syndication and private placement, which is the mechanism to pool capital together to go buy one of these properties through various exemptions, Reg D filings, etc. Um, the analogy is it's like an airplane. So in the airplane, you have the cockpit
Hmm.
of the pilots and co-pilots. This would be the general partners or sponsors or operators of the deal. They're also the people who, put the financing together, put the loans in their own personal names, and do everything in the investment basically, and use their relationships to source the best deals from brokers, best vendors, etc., and operate the deal. And then in coach, you have all the passive investors who come in and, put their money in and go to sleep. But this allows them to go now diversify into dozens and dozens of these airplanes and ventures out there. And the last thing that kind of ties this all together, of course, there's a private placement memorandum, documentation, a lot of legal work, but essentially puts everybody in the same vehicle, right? So if, in theory, if the plane goes down, well, everybody's going down with it, the general partners, the pilots, and the cockpit too. So there's implied skin in the game or reputation damage if it does. So,
Hmm.
everybody's trying their best here, right? So what I didn't realize is that a lot of people, you have to be in the personal network of these types of operators and these deals, or at least, this is why we have events where investors can meet other investors so they can learn about other deal opportunities out there. Because, this is real estate and this is ultimately a personal relationship game.
Yeah, for sure. So tell me the whole idea of the wealth elevator. What is that exactly? I know you help professionals either get involved in the syndications and or get involved in elevating their business, right?
Yeah, so the Wealth Elevator is my new book on Amazon. Basically, what I've realized is as I was kind of growing up myself, that there's different kind of stop gaps or levels into this building, right? So
Hmm.
there's different floors. And what I realize is not all advice is good, and perhaps it makes more sense in different phases of the wealth building journey. There's a lot of books out there written for the general audience out there. The books for Susie Orman, Dave Ramsey, Get
Yep.
Out of Debt, You Make Less Than $50,000. There's a lot of those books. I didn't want to write a book like that. Most of my audience are accredited investors, so net worth $1 million or greater. So we kind of started on the first floor of the wealth elevator where I was when I graduated college, bought a house to live in. My net worth was nowhere near $1 million yet, but the name of the game to me and what I read about in the book in more detail is buying little rental properties, starting that little portfolio yourself. But then once you hit a certain threshold, when you hit accredited investor status, which is typically when you make $200,000 a year at your day job as a single person, or net worth $1 million, it kind of doesn't make sense to buy these little rental properties. Remember, I mentioned when I started
Yep.
to meet all these accredited investors and they're all dumping the little rental properties because, quite honestly, it's not scalable. It doesn't make sense. To take you a little bit back to when I had 11 rental properties in 2015, each rental property I got maybe a few $100 of cash flow coming in every month, which was great, right, in my 20s, right? But
Yeah. Right.
I mean, I had maybe $3,000 of passive cash flow coming in, which is, again, great, not complaining. I don't want to
Hmm.
sound insensitive here, but when most of my clients today, they need $10,000, $20,000 of passive cash flow a month. And with those 11 properties that produced a mere $3,000 a month, I had maybe an eviction or two a year, some kind of big catastrophe, like a tree falling in the house, a washout in the basement every quarter. No problem because I had property management dealing with all the individual headaches like that. But if I needed to get closer to my goals of $10,000 of passive cash flow a month, I'm going to need damn near 30 of these
Right.
houses. And you increase the exception rate by 3 times. So obviously it's not scalable. And then you increase your legal liability of people slip, tripping, falling 3 times. It just makes more sense to go with more scalable syndication for the asset protection and also the opportunity for value add. right? Unless you're flipping houses and super, super active, you're not creating enough lift and force appreciating your money, which
Mm,
is why you go into a much more scalable commercial asset where a general partner is doing all that heavy lifting for you and your value adding units, your renovating units, etc. So now this is more on the second floor of the wealth elevator. Moving on, the third floor, right? This is more when people have reached maybe a net worth of $3 to $5 million net worth. They've kind of realized that if they wanted to, they could just throw their money into some low risk, low return type of investment. Again, not giving any investment advice, but
right.
people will use like closed-end funds, T-bills, life insurance, things that might make like 4 or 5% a year,
Yeah.
very small. But if you have a big enough principal, it's totally fine and reasonable, right? So, once you get to that point, you could kind of put it into cruise control, again, around $3 to $5 million net worth at the very least. And that's the third floor of the wealth elevator. What comes next is, what I started to realize we when we were buying all our apartments, we would buy them from very wealthy people with 50, $100 million net worth. Just like how I didn't know any accredited investors, I realized that there's a people well beyond that and what you call the family office level. Individual families that have been doing this for 2 or 3 generations who built their net worth and are, maybe they had a business early on, right? I know a lot of people listening are maybe business owners,
Hmm.
but they are no longer in the facet of trading time for money or capital creation. That's what that is. They have enough money. Now they're allocating. So from capital creation, trading time for money at a day job or in a business to now allocating their capital to grow the nest egg and of course live off the dividends and cash flow too, right? But this a concept that not a lot of people talk about that I talk about in my book, how you can start to emulate that sooner rather than later. The problem with social media out there, you have a lot of these TikTok influencers giving all a bunch of random money advice, some good, some bad, but I'm always like, well, at what point in the journey, what floor of the wealth elevator are you at, and which one really pertains to you? So I
Hmm.
encourage everybody read the book and figure out which floor you're at first,
Yeah.
and kind of go from there.
Got it. No, that's awesome, and I love how you break it down. I think that's huge. Um, do you, is there a certain, and I'm sure you talk about it in your book, like, um, well, number one, two different things. Number one, are you coaching or helping people on a one-on-one basis, or can people come and talk to you in terms of that, or is really more of what they can find on the book?
I would say check out the book. If people are accredited investors, they certainly can shoot me a line. We can definitely jump on a quick Zoom call, lane@thewealthelevator.com. But I would say for most people, especially if you're on the basement level of the wealth elevator or the first floor, under $1 million net worth, pick up the book. If you buy the book and you put a nice Amazon review in there, take a screenshot, you can email team@thewealthelevator.com and we'll hook you up with the PDF version. And I know at least that's what I do. I just throw everything into ChatGPT these days and ask it more individual queries. But then we'll
Mhm.
also give you the MP3 version. So if you're like me and can't read too well, you can, I'll read it to you apparently in
Yeah,
the MP3
yeah,
format.
yeah, for sure. Okay, and so besides people finding you through your the Wealth Elevator website and finding your book, how else can people connect with you?
Yeah, I mean, they can go through Amazon, and I also have a podcast, The Wealth Elevator. Been doing that since 2016. I try to put everything on the website for free. I mean, if you're just getting started, buying little rental properties, you're not yet the credit investor. I used to teach people how to do that back in the day.
Mhm.
When I started the podcast, 2016 to 2018, I kind of stopped doing that. They can go to thewealthelevator.com/turnkey. There's free, remote rental buying e-courses there we have for them. But yeah, I would say just check out the book on Amazon. That's a great first step to getting into this more alternative investment, alternative finance world.
Yeah, for sure. For the people that are listening to us and are watching us, if they're going through any challenge, whatever challenge that might be, what are a couple of things you can say to them so they can start overcoming that challenge?
First, I would say, and this is more on the personal development side, I would say like, figure out if this is a concern or worry. If
Mm,
it's a worry, there's nothing you can do about it, right? But if it's a concern, there's something that you can do about it. So jot it down. Some people are very emotionally roller coaster. Not a bad thing. Sometimes it's actually a good thing. In particular, when you go on those highs and you get these emotional feelings, you are very much more like motivated to jot things down or do things that can
Hmm.
get you out of your situation if it's a concern, if there's something you can do about it. So use those waves to your advantage. If you're like me, who's a little bit more steady state and more, um, more consistent, I would say, write a plan. Write this down. What are the feelings you're feeling? There's reasons why you have these emotions and feelings, and typically, if you frame it the right way, these are your body, your subconscious hinting you that you should be doing something to better your situation. But if it's a worry, you can't do anything about it, that's another side of it, and you just got to let it go. But again, some people have this mindset where they're self-defeatists and they're like, well, it's all out of my control. It's everybody else's fault,
Right.
right? Take accountability of your own situation and really tease out on your own, is this something you can do?
Yeah, I
Or
love
maybe get AI and say, hey, be hard on me. Be my
that.
hard ass AI coach and help me
Yeah.
through this. Is this a concern or worry? Start from
Yeah.
there.
No, I love that. I love that. Um, so you talked about early on that, when you're not on a particular place, you have to like really be disciplined and you gotta just kind of you have to do the work. Tell me a bit about what were you doing then, and also tell me about what are your habits now? What are your daily habits? What are the things that you do, your non-negotiables that you do right now?
I mean, I am an operator. There's usually two different profiles,
Hmm.
right? The visionary and the operator.
Right.
I have good ideas, I think. I'm not super out there, but I am blessed to also be able to implement and operate. So, I live in project management software, so like my Asanas. I usually
Mm,
get to zero inbox every day, with the help of my team,
yeah.
obviously. But a lot of it is, I think what helps me get there is a lot of the things that are noise, we get rid of. We block things, like, and whether it's people or things coming in the inbox, literally, or things and projects that don't really make sense at this time, we just push off to a later date. I definitely follow the David Allen zero inbox mentality.
Mm.
That's another good book read for people, for more project management.
Got it. Okay. No, well, Lane, I mean, I love what you're doing. I love what you've done, and I love the message you have, and I love the fact that that there is definitely a different path for wealth, not necessarily the linear path. Any last minute things you want to share?
No, I mean, I think if I were to scream from the hilltops, I would just say like, hey, just think about it. If you're just to buy a handful of rental properties and pay them down over 30 years, which isn't the best strategy to me, in my opinion. I think there's a lot better ways of doing it, to grow it even bigger. But if you were just to do that, that would get you a pretty nice retirement or get you
Yeah.
to financial freedom at some point. So there obviously is a different way of doing this. Unfortunately, the way the investment complex out there and Wall Street works, it's all, the marketing is out there to do it this way. And oh, by the way, it's super complicated. And, just trust us. We have all these like MBAs and quant, whatever analysis people. Just trust us, right? It's too hard for you.
Right.
And that's where I'm like, hey guys, like, like a rental property is like, it might be a little bit daunting, but if that's new to you, check out thewealthelevator.com/turnkey. We kind of break it down easily. And yeah, you put it into a spreadsheet, but it's not something that the average guy can't do, right?
Right.
And don't get intimidated by yourself.
Yeah.
So I think you can do a lot more than you can think, but you just have to make steady progress in it.
Yeah, no, I love that. One thing that just came to mind while you were saying that too is not only society. I think we're in this in this time where they're pushing, right? Media is pushing, go to school, get a good education, kind of going back to that path. I'm not saying nothing. I'm not knocking down education, but I do believe that while you take that path, they're making you to be a good employee, not necessarily a good entrepreneur or a business owner or someone that can actually level up. They want you to be, more than anything, in my opinion, a soldier versus, the captain of the ship.
Yeah,
So
yeah. I mean, we need more Indians, or what did they say? We need more like
uh,
I forget
we
what
have
the saying.
not too many Indians, not enough chiefs.
Yeah, yeah, exactly. But the society works when you need more Indians. So that's why the school system is what it is. I know some people get upset with that, but it makes
Yeah,
total sense, right? To run a society. The question is what side of the equation you want to be on.
right,
Just like if you're watching too much YouTube or TV, there are two people in life. There are people who consume content and people who create it.
right.
Just
Yeah,
like money, there are people who create money and those people who spend it.
right.
Which side of the equation would you rather be on? And it's a choice, but you got to be, I guess, first being made aware of this thing out there, which hopefully I know you're
Right.
trying to do out there too. And this is where I think, people just need to kind of stop and think like, hey, yeah, there's a different way of doing it, but then why? Like, what's the action plan, right? So that's why I'd say, like, check out my book, at least for
Yep,
this financial stuff, at least to kind of shake you off of the normal financial norms that's kind of put out there as dogma.
for sure. Well, again, thank you again, Lane, for being here. Really appreciate everything that you shared with us. I think there were some really great golden nuggets there. So thank you for being on the show.
Thanks, Caesar.
Yeah, definitely. For the rest of you guys, do me a favor. Make sure that you go out and check him out. Go get the Wealth Elevator book on Amazon. And then do me a favor. Please make sure that you share this message because definitely somebody needs to hear it. And I will see you guys at the next episode. Thank you.
Hi, I'm Cesar Espino, real estate investor, business coach, and consultant, and author of the book, You Can Overcome Anything Even When the World Says No. My number is 424-501-6046. In my book, I talk about making the necessary changes to shift your mind for prosperity and certainty. Pick up your copy at Amazon. I also love helping families with their real estate and can purchase your house fast and all cash. Follow me on Instagram, Facebook, and LinkedIn. My number is 424-501-6046.
Thank you for having me today. I am so glad you've tuned into this podcast. You can find me at your favorite podcast platform where you can like, subscribe, comment, and share. And to learn more about myself, my services, you can find me at www.CesarRespino.com, or you can also find me at your social media. Thanks for joining me, and I am looking forward to having you at the next episode. And know you truly can overcome anything.